Welcome back to Beyond the Cards, your monthly podcast where we all talk about the payments news that you want to hear about most, along with pretty much anything else that interests us. We're joined by the full Redbridge crew today, and we also have some special guests on. We are joined by Evan O'Brien and Ryan Hallett. If you guys want to quickly introduce yourselves, who you are, what you do.
Hey, Dan, thanks for having us. Excited to be here this morning. I'm Evan O'Brien. I'm the Senior Vice President of Sales Strategy and Operations. Fancy term used to being able to oversee all of the sales channels, ensure whether it be our integrated partners or non-integrated partners have what they need to succeed in the market, as well as not run into any issues throughout the relationship here with PayRock. Very excited to be here today.
Thanks, Evan, and appreciate Redbridge for hosting me too. This is Ryan Hallett with PayRock. I'm the Chief Growth Officer, and today at PayRock, I kind of oversee anything from our strategic partners to support of our integrated partners, direct sales channel, and ISO and agent channel. So pretty much everything strategy and growth related to PayRock and its future.
And what generation of acquirer would you say that PayRock was? It's a sensitive subject. We want to know.
Yeah, we joke internally, Dan. We call some of the larger ones the aircraft carriers. I wouldn't say we're an aircraft carrier. I'd say we're more of a Gen 2, Gen 3 type of company.
Gen 2, the mysterious Gen 2. We were discussing about who's actually Gen 2 because it seems like everyone's either Gen 1 or Gen 3. No one wants to be Gen 2.
we leverage some of the components of Gen 1, but PayRock, without getting into specifics, PayRock's kind of a pretty uniquely positioned company from an integration standpoint. So leveraging a lot of the Gen 1 stuff, but aggregating into more of a Gen 2 model.
Exciting. All right. Well, let's kick off and talk about some news. And so we've got our first story up from payments.com. Always a great source of payments-related news, diving into Apple Pay actually overtaking PayPal as the most favored in-store mobile wallet. Now, I didn't even know that you could use PayPal in-store. I just thought it was an online payment option, so color me not in the know. But I guess I should have known because I do see that on merchant activity. But very interesting because I look at these numbers and they're all kind of low, but that also kind of makes sense in the way that they've done this data, right? It's not an aggregation of all digital wallets. It's each individual one's market share. But, I think it makes sense because there's so many iPhones in the market today, and more people are, using tap to pay and using NFC functions. So to me, while it's maybe shocking for others, but it would make sense if iPhone has such a high penetration rate that they would be the leader. What's kind of crazy to me is it took till this long. I don't know. What does everybody else think about PayPal in store? Have any of you used PayPal in store?
I have never used PayPal in store. I don't think I use PayPal that much anymore. And I can say that I probably do use my Apple Pay more frequently because there'll be times where if it's embedded in an online checkout that I'm going through, it's so much faster for me than even just getting out, a different card from my wallet.
Oh, I'm an Apple Pay user. The green bubble people, the Android users are, I feel, far and few between. I'm a 42-year-old male that lives in the Midwest. Where I do my commerce at in my hometown, I rarely bring my wallet anymore. Once I got used to doing Apple Pay and understanding the business locations that accept Apple Pay, I really rarely bring my wallet when I'm with my family around town, things like that. But I will say, I think PayPal, on the other hand, they probably have a bigger, more widespread acceptance across platforms, devices, make it a little more suitable for like the broader user base. But, that also comes with higher fees and some security and customer service concerns. So I think Apple Pay kind of is ideally for those deeply integrated into the Apple ecosystem, although albeit most general users aren't prioritizing security, they are prioritizing convenience and speed. And I think due to that, Apple Pay, we're going to continue to see more adoption in those areas, but maybe PayPal on a more global or broader use scale.
Yeah, I would definitely agree with, I think PayPal's broader applications seem to be growing faster in kind of the cross-border international spectrum. And I think one thing that probably really adds to just overall adoption of digital wallets, NFC in general, is like, it really does matter if that little symbol is on the device. Like, if it just says, like, written on the terminal on its screen, like, swipe, dip, tap, I feel like you're less likely to use NFC unless there's like a big sign on the device that says, like, that lets you know that you can do it. And I think merchants being an understanding that, like, those subtle in-store reminders to people of, like, hey, you can tap to pay here, they really work in getting people to adopt those different options, because there's nothing worse than going to a store where you think there should be tap to pay and then there's not, and you're like, oh, well, I have all my groceries on this conveyor belt and you don't accept Apple Pay, Google Pay, PayPal. I guess I just have to walk away. Like, what do you do in that situation? And I bring that up because there's obviously a well-known grocer in our local area that still doesn't accept any NFC. And I see people all the time thinking that they're going to be able to pay with Apple Pay, and they go to the register and they're like, oh yeah, no, we don't accept that.
Yeah, I think it really comes down to comfortability too. I think a lot of people began to get used to tap to pay just over the years, and I've seen even with my parents or others that once they kind of learn how to use it and how simple it can be, they almost get excited to use it again. As to where, especially for PayPal, really the only time that I'm interacting with PayPal is typically when using a Venmo, right? And more of account-to-account transfers, and not in the top of my mind like my Apple Card or all of my other cards connected to my Apple Wallet are. And I, a lot of times just, hey, my credit card doesn't function. Oh, thank gosh, I have my backup. And then once they kind of forget their card and they use their phone for the first time, I often find that many don't go back or are leading with that tap or with their phone.
Yeah, an interesting statistic on that. I think in 2018, Visa had approximately like 1% adoption in the tap to pay kind of payment method, and now it's up to 50%. And last I read, I believe 79% of in-person transactions on Mastercard are contactless. So just to show you kind of from 2018 with a 1% adoption up to a 50% adoption, that's quite heavy in 6 years.
Oh, definitely. I mean, I will literally only go to a gas station that has tap to pay functionality because I've been card skimmed so many times that I'm like, oh, if it doesn't have tap to pay, then this just isn't a secure location, and I'm not going to get gas here. Update your terminal. I know it's expensive, but do it.
Dan, I recall the little issue you had about 6 months ago with your bank when there was some skimming going on, and that was quite a pain in the butt for you.
We don't talk about my online banking situation. Maybe in another episode. All right. So, honestly, not shocked at all by this. I know that we had recent episodes where Chelsea and I were aspirational to some extent, but also still hesitant, but no surprises at all. The Visa Mastercard antitrust blocked once again. I think it's been going, I feel like it's going to span my entire career, but like really at the heart of this, right, when we see this settlement get blocked time and time again, really, it is just usually comes down to larger merchants versus smaller merchants. And the larger merchants who have, there is asymmetrical information within the industry. And those larger merchants, I feel, always kind of put pressure to have these settlements blocked and make really compelling arguments because they know that there's probably way more to give. And the smaller merchants basically just kind of have to lean with it. But always like very interesting. I see a lot of people, especially like now in the fin influencer space, try to talk about like the settlement and leave out a lot of nuance, or maybe don't understand all of the components of certain aspects that these merchants are advocating against. Like honor all rules, etc. I see a lot of people mentioning honor all, and I think about it from like a checkout flow perspective of being like, that's all good and great, but the ability to like actually implement honor all is going to come down to, can you, from a BIN perspective, recognize that is an airline card that I do not want to accept versus a standard rewards card versus a small business card versus a vanilla credit card, other than relying on your associate to be like, oh, that says rewards, I'm not supposed to accept it, which like, have fun with that customer interaction. I think there's just aspects of this that I don't even know if we're technically able to even fulfill, even if merchants got what they wanted. I don't know, Chelsea, are you surprised?
No, I think, like you said, it's the large merchants that are going in and they're,
I'll say this is right. I'm not surprised, really, really one bit. I mean, if you take a step back and kind of look at what you're dealing with here, from, credit card issuing banks, okay, card acquiring companies, lobbyists, the federal government, what we consider all that is the payment or financial ecosystem. It's a very complex world, and those are the stakeholders that interact and facilitate, regulate payment transactions. But those are all behemoths, and you could look at it as almost moving mountains. So, Dan, I think to your comment that I may see this going on for the rest of my life, maybe it's somewhat true. And then if we take a step back and look even at what we could learn from history, for those that have been around when the Durbin Amendment was passed, unfortunately for most merchants, most SMBs at the time, there was a lot of the bigger box of the retailers that were on a true straight pass-through or interchange plus program. But for a lot of those merchants, when regulated debit went down to 5 basis points at 22 cents, the merchant processors, the merchant acquirers, they cleaned up on that. They made a ton of money. Their costs went from 1.54 and 5 cents to 22 cents and 5 basis points. And that was a massive payday, albeit Senator Dick Durbin was doing it to help out the businesses of America. But really, who really benefited was the payment processors and the card acquiring banks. So it just gets really messy in those areas.
I mean, I think we talked about this in another episode, and Ryan, you're 2 for 2 for interrupting Chelsea, but so I'll let her finish.
I'm sorry, Chelsea.
I'm happy we have some guests on here. It makes it way more, it's fun. But I think part of it too is how do they decide, how do you pick and choose what's going to receive what's going to be approved, what's going to be the thing that is determined that needs to be regulated. And it's just such a broad range of fees. And, every merchant can go forth and say there's a certain fee that is more important to them to have regulation and oversight. And so I think when the courts really get into it, it just is so confusing for them too.
Yeah, I think it's just also the rewards market is so heavily entrenched, right? We go over and we look at Europe, everything is regulated to 30 bips or 20 bips, and really the only margin is on either scheme or the actual acquirer margin. And they still complain about how expensive it is. But it's not going anywhere. I mean, I was just, I think Chelsea was just in France. I was just in France. And paying by card is pretty common. Aren't you guys glad you don't have to deal with Visa and Mastercard as much in Europe, getting themselves into trouble?
Yeah, no, what was that a question for the European?
No, I just talk at you Europeans. I don't actually ask.
I know.
Opinions.
No, I mean, there is nothing. I mean, we are, and in France in particular, there is a huge penetration of cards, although the interchange is capped and is definitely not profitable at all for banks. But that's another topic. I think that's why we're seeing payment methods like PayPal growing so fast over the years.
Yeah, I definitely think we'll get back to that regulated debit topic when we talk about small businesses. But now I want to talk about what I think is like extremely interesting. And again, like I think there's a lot of people commenting on it. And I think, Ryan, to your point as well, is like even this like Visa MasterCard settlement, if you're not in the industry and you don't know a lot about how things go down in the weeds, I think it's kind of hard to discuss exactly why these things happen and their broader scale implication. And really what I'm talking about is the Yada situation with customers who were using Yada through a connection through a middleware company called Synapse to a bank called Evolve in Tennessee. Essentially, Synapse, which was essentially playing an open banking type middleman role, went bankrupt. Because they went bankrupt, their connection to Evolve Bank was frozen. There were some issues with the balances of the ledger accounts being incorrect. And essentially, Evolve locked all of those accounts. And now a whole bunch of customers don't have access to not only funds, but now even that bank itself was subject to a data breach. And I think it calls a lot of things into question about the stability within kind of the fintech space and those middleware providers, as well as like, why would anyone even do this, right? Like no one's heard of Evolve Bank in Tennessee, right? Sorry, Evolve Bank, but you're not on a lot of people's radar unless you're one of these fintech companies who seems to be very interested in you. And I would say, probably the reason these smaller regional banks get zeroed in on by these fintechs and the promotion of these products, right? If you're a bank and you're a bank with over 10 billion in assets, your debit issuing isn't going to earn a lot of interchange revenue. So it makes it a lot less exciting to have a checking and savings account with that bank, because you're not really going to get a lot of rewards off of that. There's no rewards really in that space. You're basically tied to credit. So when you start offering rewards for checking and savings accounts through these kind of new fintech neobank startups, well, how are they able to do that? Well, they partner with these regional banks that sit behind the scenes that you probably as a customer, when you sign up for one of these neobank fintech services, don't see. And the company says, your deposits are FDIC insured, et cetera, but not by their own banking license. It's the banking license of a third-party bank behind the scenes. And so this whole situation is just like wild to me. But I think we talked about in a previous episode that like, this is why some of these companies need to be regulated, because, spoiler alert, these people still don't have access to their money.
Yeah, I think that there certainly is a need for more regulation, but a lot of times what we've run into is that a lot of the financial technology that we all depend on is, some of it is still on green screens, right? And And for some of these, newer fintech companies that want to get into whether it be neobanking or kind of a more creative fintech offering, a lot of the bigger banks just don't either have the APIs or the capabilities to accomplish something within, 3 quarters, right? And that's why you see some of the success that involves other customers, Avita Bank, Stride Bank out of Texas, that are behind a lot of the instant payouts or real-time payments. They're getting involved in trying to kind of get their house in order and prepared to be agile as to and try and win some of that market share. But to your point, I do think there needs to be some more oversight there, especially with those third-party transmitters.
Yeah. And I mean, we are just, as an ecosystem in the US, not set up for open banking. Like, to your point, some of the larger banks may have no API or limited APIs for reporting, and they may not be interested in necessarily opening it up. So it puts a lot of responsibility on these middleware companies, which are really serving a critical link between, your front end application. So someone like a Yada, right, who's trying to encourage people to save more and is gamifying the savings aspect of it. But they need very specific banking partners to make that work. And without, regulation, I think this might just be one failure and potentially many failures. And I think if you're a big bank, you're like, no, I'm just not going to get into that space because I can't regulate that middleman. So if anything fails with them, then does that look bad on me? And I maybe necessarily doesn't want to be in that space.
Yeah. What does your monitoring look like? Do you have the capability and the throughput to keep up with some of that speed of the more agile companies? Yeah.
See, you're much more optimistic than I am. I don't necessarily consider them agile. I think it's a play off of they're likely to have less than 10 billion in assets. And so if you can charge the full published rates for interchange, that gives you a little bit more room to have some of these benefits that some of these front end aspects are then able to provide. I mean, I don't think you're making a lot of money off of 5 basis points and 22 cents to be able to give these people rewards, unless they're paying into them somehow by just even participating in the ecosystem. Now, obviously, there's other impacts than beyond just like a Yada-like company. There's a lot of people impacted by this, but very interesting to see. I don't know. I think it's a space we'll have to continue to watch. AKA, I'll continue to watch it because I'm obsessed with it.
Well, not only you, I am too, because I actually got an email regarding this data breach personally.
Oh, no.
Yes. And what is very disturbing is that Evolve was kind of warned back last year about this, like, hey, you have a risk issue. And two, this is the outcome of it. Now you have a data breach. You knew this was possibly going to happen and possibly would have been done. And the Fed did tell you your risk is horrible. Fix it, tighten it up. And they did not. So now a lot of people are pointing the blame right back at you. And I'm one of those consumers.
Yikes. Well, way to put a personal touch on it. But yeah, I mean, I just think it's so... And I think the overarching theme here is maybe involve payments experts when you're thinking about some of these things. I know that, like, the tech side is very alluring and tech likes to think that they can solve a lot of issues and sometimes thinks that they have a lot of experience in payments. But sometimes you just need a tenured seasoned person in there to be like, what's going on here with this? Like, how are you intending to make this work? And certainly with any regulation that's coming forward. So let's wrap out before we get into the small business topic, because the small business is something like very near and dear to me. And so I want to spend a fair amount of time discussing it. But Forbes coming out with a story about, are we seeing the end of QR codes? Is there going to be a plan to deprecate QR codes in the future or alternatives? And I thought it was really interesting because it's always very interesting to me to kind of see where fraud trends are originating from. You know, the US market, not typically known for originating a lot of new fraud schemes. They typically come from overseas first and then get used in the US. I'm not a huge QR code user. I'm actually kind of annoyed by them in general. But looking at the potential for fraud with QR codes in the sense that pretty much anyone can generate them now, and you could make them look as realistic and send them as realistic as the provider or, you know, merchant that you would be expecting to receive a QR code from, and instead have it be a bogus QR code. I think you're still going to see QR codes for like restaurants, but I think it might not be linked to payment.
For some of them, they are. I've actually paid with the QR code at a restaurant before because they didn't have options, so they had the QR code on the receipt. That's a faster way. I don't see a lot of them. You only see them for like menus or stuff like that. But I am iffy on that because there's a high risk on the QR code payment world. And I think one of the options is, if you don't have Apple Pay, I think some people use this, but it's not popular. It's not a popular form of payment.
There's a lot of QR codes on our parking meters now, where you're just scanning. And so I could see how, you know, someone easily goes and prints off a whole bunch and goes and sticks them over top and tries to redirect to get the payment. But I don't usually pay for a lot of things with the QR code, but I will use it to follow to the website.
Well, and I think that's where they're also saying that there's risk, right?
Yeah, they make a fake website.
Exactly. Like, I think there's maybe like a sense of trust in a QR code. It's like
totally.
PC. So.
I'm very surprised that you're saying that you do not find a lot of QR code. I don't know whether it's because it's in America, but here in Europe, we usually get them. We usually see them. Of course, not necessarily into retailers, but for example, in the digital services, if you are watching a YouTube video or something like that, it's very easy, to get the QR code for anything. So of course, there's a potential risk, behind it, but isn't it the pain point of each new payment method that we've seen so far? That of course there is a risk, but I'm very confident into the fact that we'll find some technology and some usage, being really careful about that, of course, but also the technology behind to help mitigating this risk.
Yeah, I mean, I think if it's like, say a digital wallet creates a QR code for you, I think that's like way easier to trust, or like an alternative payment method for use in stores so that they can scan with the little laser gun instead of, using NFC. I think that's probably like a safer aspect of it. I think it's definitely like use this QR code to access a checkout. I feel like that's where probably I would be like, is there another way I can access this checkout? Because how am I receiving this QR code? Any QR code that's static for a period of time to me seems a little sus. Like on a parking meter,
Yeah, I think anywhere where it's not in a kind of a controlled environment, but yeah, I think QR code, the usage for payments specifically kind of increased over COVID, right? When we were trying not to touch anything, I thought that the pandemic kind of consumers sought after kind of more contactless payment methods, and I think the QR code was one of them. I know they're wildly adopted in Asia, and we see an increasing amount of integration in the U.S. market. I don't think it's ever going to get the adoption of of an Apple Pay or something like a PayPal, even something like that. But I do know it's still gaining traction. I think we'll see them more in like kind of what we discussed, specifically non-payments related to access information, but more payments related in like retail, restaurants, maybe some type of small financial services. But that's just driven by a need of convenience in these kind of areas. But paying with a QR code for a hamburger I had and fries at a restaurant, is palatable to me versus, Chelsea's example of a sticker over a parking meter or maybe something for a more high ticket item that I most likely would not feel comfortable doing.
Yeah, and I think it speaks to more of the dynamic QR codes, especially in the Indian market, is that either your phone or some trusted source is generating a dynamic one-time QR code that's then validated and, scanned by that cashier for maybe an account-to-account transfer, or, a dynamic QR code when you might be using Zelle or PayPal or Venmo, to scan somebody's dynamic QR code. And people will just need to trust the source of where that QR code is, because static QR codes can certainly lead to fraud. But it's more of the validation and who to trust.
Well, that's definitely something talked about in this article, is the source, and of course spoofing the source. But also, like, I think interestingly brought up in this article is like, there's also other technology that's evolving at the exact same time and maybe at a more rapid pace that is more trustable or has more security inherently tied to it. So it's like multiple avenues are being pursued at the same time, and it's really like what technology is going to win out at the end of the day. I think that's always something that's really interesting, as there's different technologies attempting to do the same thing. At some point, one is going to stick more so than the other one, and then the other one will probably just be relegated to something in the background. Like, I think one of the interesting things that is brought up is, our phones are getting pretty dang fancy, and will there even really be a need for a QR code in the future when our phones can basically see a URL written down somewhere on a sign and pull the URL out and be like, did you want to click that? Instead of just needing a QR code to get you there. So all of these competing technologies mean that somebody's going to get relegated to the recycle bin here. All right. Well, very interesting topics. But now let's talk about what we're all here to talk about, which is options for small business owners, mid-sized businesses. I think the reason why this resonates with me so much is, we work often with very large merchants who have, again, asymmetric information, and really a lot of small businesses, they're trying to, one, just survive, two, take money efficiently, three, make themselves not a risk to be robbed, and four, trying to get business solutions that make it easier for them to run their business. And I think a lot of times what I see is I will go out to the market, you'll maybe be at a farmer's market, or you may be at a small dentist office, name a small business. And you have a pretty high chance that maybe one or three companies are going to be present at the checkout. And you go and you look at what those rates are for the checkout, and they especially all of us on this podcast, we know those rates are pretty dang high. But there's just usually no other options for those merchants. And a lot of times I will be following like a small business owner, maybe something online, and they'll talk about like how they accept payments or payments processing. And without a doubt, in the comment section will be lit up with, I pay 3%, I pay 3.5%. Cost of processing is so high in the US, which it is. I'm not going to argue that, but I'm like 3%, 3.5%, 4%. Like, what are you doing? Two, that's maybe the common cost for SMBs is not really attached to, again, like what your bigger merchants are paying. Like, there is no way Walmart or a Best Buy or a Target is paying 3% on anything. So why do small businesses have to pay for it? So what can small businesses really do to find good payment options, right? I feel like they're stuck with rack rates. Does anyone feel like the rack rates are, I guess, appropriate, right? If you have point of sale technology wrapped in, if there's other services wrapped in, does it make sense that they should be paying rack rates? And maybe it's a viewpoint of small businesses that maybe they're not considering the full picture. I don't know. What is everyone's thoughts?
I think it's certainly a loaded question. We have seen a dramatic increase in interchange fees, some of that being tied to rewards, but then you also see some of the, changes that the card brands make in capping those fees, right? For instance, surcharging has become very prevalent in our day-to-day business and what some of our partners like to distribute and enable at their clients. But recently Visa lowered the cap from 4% to 3%. Yet a non-qualified or a downgraded card falls into a 3.15% and 15 cent per transaction rate. So Visa's effectively saying, Mr. Merchant, you aren't able to offset your entire costs because it's not just about the 3.15, it's all of the network assessments and dues that are also bundled into that as well. So, certainly the average effective rate of clients, and depending on your average ticket, of course, we've seen it constantly begin to increase. And so I think it's about educating those small businesses and enabling with the right tool sets and giving them the choice. Would you like to impose some sort of fee to offset some of those costs? Or are you going to be paying a higher percentage, maybe even more than the cost of acceptance, because you're using a solution that runs parts of your other business whether it be via automation or, third parties that are integrated into a platform that payments isn't just its sole function, right? Kind of the difference between what we look at as non-integrated versus integrated, right?
Very true. And I think, like one of the challenges that I always kind of think about is the debit situation, right? I think we all know why those rack rates exist and we know why they're created the way that they're created. But as a small business owner, I think it's important for you to think about like, well, how much debit am I really getting? Surprise, surprise. Your provider's not going to tell you how much of your volume getting applied a rack rate was debit. Maybe it's somewhere in the data, but maybe it's not. And if, 70% of your sales are done on debit cards, I mean, now you're potentially vastly overpaying for some of those small business solutions. And so while it's nice to have everything tied into one, if you're a very serious small business, I get that it probably sucks to make your life a little bit more complicated, but that's also like the challenge of growth, which is, unless you're willing to pay for it or overpay for it to save yourself somewhere else, I think that's just part of the challenge. And I know at least a lot of small business owners are concerned about cash reconciliation. They're concerned about tax. They're concerned about a lot of things. But I also think that they just don't know what to ask for. I think you can always ask for IC Plus.
I think you have a good point there, Dan. I think payments for a lot of SMBs, and Evan and I see in our daily professional lives, payments are typically an afterthought. You'd be behooved at how many restaurant or business owners, are scrambling 24 hours before they're opening because they bought a point of sale system or something to help with inventory control, employee management, all these different things, buy one, get one off to your restaurant, and then scrambling to get payments lit up, a day before the grand opening, if you will. It's actually quite mind-blowing. So I think that's where, not that every small business owner needs to have let's say a payments consultant or someone payment advisor, but I don't think SMBs seek out the proper way like they would maybe an accountant or someone that would help them prepare their business taxes or maybe deal with some regulatory compliance in a specific field or vertical, and they take the time that they would seeking out maybe an operations manager or food vendors and things like that. Payments are more of an afterthought. So I think that's unfortunate because I think people end up just getting stuck into something. And then, as you all know too much from Redbridge, albeit those contracts that are very egregious and hard to get out of and maybe stuck in them for 3 to 5 years. But I also think the other flavor of it is, I look at SMBs, and while SMBs have a ton of different, device terminal options, a plethora of them, each of those devices are typically tied to specific payment processors with whether that be, a flat rate model that's, non-attractive. Very, very few will you find that they're able to have the wherewithal to ask for an interchange plus, right? But then also have a device type or an ecosystem that does what it needs them to do to manage their business, but also accept payments. So it's like, do they really have all of these options? Or are they really just business solutions without options tied to processing specifically? And I think a lot of them are just more or less solutions versus options.
Yeah, and I think, Dan, you mentioned it earlier. There's a lot of asymmetrical knowledge of our industry, right? And unless you're living and breathing it every day, like most of us on this call, it's very difficult to go out there and source and kind of find that northern star, or, every time you Google, way back in the day, it was more so just point of sales that were smaller companies that, catered to a certain area. And then now you have ultra niche verticalized solutions. And there's a client of ours that's a point of sale that manages bingo halls and fraternities. And it's to manage your recurring payments and to make sure all of the seats at bingo night are filled up, right? But again, at the same time, because there's such a hyper verticalized focus, sometimes they're pigeonholed in, and the more that they grow on that platform, the harder it may be to unwind later as they expand.
Yeah, I definitely think that the ISV market and embedded payments is huge, and the verticalization of it, I think, can sometimes look very attractive, right? Like, it's like, oh, I'm a hair salon. I need to use this very, very specific product for hair salons. And I think sometimes as a small business, it can be very attractive to want that, right? Because you're like, oh, this is designed for my business. But one of the things I think even that we have to talk about with like really large merchants sometimes as well is like, you're just taking an authorization and checking out. That's not a very complicated process. Maybe you don't need that ISD if you have everything else down pat, or maybe you're overbuying on a solution and not even using it to its fullest, but you're definitely paying as if you're using it to its fullest. So sometimes I think you have to take a step back and say, what even am I really taking a payment for? Do I need to make it more complicated than it is? Yeah, I think it really all depends on the business.
Right. Yeah. Are you really utilizing the full potential, or were you told that it helps somebody else, right? Or you see it, or you've heard the buzzwords and, oh, I need this, right? What is it that you really need to run your business? You see a lot of these kind of third parties that integrate in, and they become a function of maybe one piece of your business, and then they kind of slowly trickle downstream, and then soon your options start to close because of how integrated you are into that platform. And then they later introduce their own payment structure, block out some of the options that client may have had before. And now the tool isn't as useful or has become more costly to use, to where before it was an advantage.
Yeah, and I've even seen things like tax reporting being brought up as like, oh, it's so important for me to have tax reporting. And I'm like, maybe expound on that, what you mean by tax reporting, because every payment provider is required to give you a 1099K. That's not a feature. That's a requirement. From a taxing perspective, is something like hyper localized to making sure that specific use taxes are paid, like differences in different counties and sales tax, or you have customers from out of state coming in and doing things that you really need very specific tax reporting for. And how accurate is some of that stuff as well. But I think really the big thing is asymmetry of information and knowing what to ask for. I've definitely seen merchants who process like several $1 million a year on rack rates, and I've just kind of scratched my head. And I've seen merchants who process like $70,000 a year who have IC Plus and sometimes better rates than really large clients. I'm like, how did you get that rate? You must be a very good negotiator. But I think that all plays into the difference of a lot of times the service providers will give you all of those same services at IC Plus. I don't think they limit them. I think they would just want your business in general. But again, it's how tough are you going to be? And I think also some of it might be like the romanticism. I can never say that word. The idea that like cash is still super prevalent, and that in the SMB world, I still think they really feel like cash is king, and they feel like cash is free. And I don't think cash is free. I think it's very risky, and you have to manage that cash. And so there's almost even like a disconnect of, okay, if you value electronic payments for all of the information that they bring, and you're willing to pay for it, but you also want to be paid in cash. Well, like when I hand you a $5 bill, there's no information that comes with the $5 bill. You just get money in hand. So even being able to like reconcile from a small business perspective, like, do you want to be cash based? Or do you want to be electronic? I think the other thing that's crazy is that, and I'm seeing more of this evolve, but the ability to pay by bank, and maybe looking at some of those different solutions, maybe it is a pay by bank provider. I'm not just talking about like Venmo, right? You can talk about Venmo and their whole services delineation, but there are other ways to get paid by bank. Maybe that's a more effective solution for you.
Certainly. I mean, look at what early warning systems is coming out here in the coming months with Pays, right? That's an account to account for e-commerce. And so I think we'll see a rise of some of that account to account even in the retail market or SMB, right? It's here, scan my Zelle QR code from my phone and you can instantly transfer to the business bank account, or, something of that nature.
Exactly. Capital One just released theirs as well.
Are they part of
Here?
I don't know. I always forget who the members of EWS are because there's like kind of a lot of them. But yeah, I mean, I think that's all very salient to the small business perspective. And I think, it's just the eternal challenge of being a small business. There's a lot of work. There's not a lot of hands to go around. And there's not a lot of people really willing to give you the information that you need to do, or like that you need to really run your business efficiently and honestly stay afloat, right? I think, what is the statistic? Like 75% of small businesses fail. It's tough, and you have to really be smart about seeking out quality information about especially payment services, because if you're not careful, it's going to become a big part of your bottom line.
That's the other half of the battle, is making sure that they're paying attention to the bottom line,
Yeah. Well, that wraps up our episode for the week. Unless, Jasmine, you want to add in one final thought.
I was just going to say, and that's why it's important to subscribe to our podcast
Oh, yeah. Get that promotion angle in there. We'll leave it in. Well, thanks so much, Ryan and Evan, for joining us. You are our first guests on the pod. Maybe not your last time. We'll see. We'll see how this episode does.
Well, as always, we appreciate it, and it was a pleasure speaking with everyone.
Thanks for the opportunity, Dan and team. Have a great day.
Thank you.
Bye.
Bye-bye.